The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. Well, as the old Chinese curse says, may you live in interesting times, and by golly, this is what we're in. I posted the charts here as we go across the pond over for the DAX and then also for the FTSE. As you can see, we've had a downtrend in both of these. If you look at the FTSE chart, the 4-hour chart, that is a head and shoulders pattern. The right shoulder far, far lower than the left shoulder way back there on the 27th of January. And so that sets up as a head and shoulders pattern here. And it's already started to move lower this morning with the rest of the things. Many things have changed since we were on last with this thing that's going on in Ukraine or Uganda. I can't remember which one it was. Oh, Ukraine. But, there's going to be some really interesting things happening now because of the political things involved. Basically, Putin can do whatever he wants to do, and he's going to do whatever he wants to do because no one's going to stand in front of him. We were our last hope, and I think we probably did the right thing by just standing aside because that's really none of our business over there. If you want to know, folks, that's their country, and they'll get through it, and we'll all be okay. If we start meddling in it, that's where the problem lies. The next trouble spot will be Taiwan, and that'll be down the road probably somewhere between 6 to 9 months from this level. Now, I want to share with you a really cool chart. Let's get back to what we really like to do here, and let's talk about patterns and stuff. Here is a chart of the, hold on, let me get it up here, of the, I can't even remember which one it was. Well, I think it was the Australian dollar. I can't even see. Wow. Jeff sent me this cool chart, and I can't remember what it is. Anyway, you look at this beautiful 135 pattern here. He's got his targets all lined up on the right side there. That just lines up just about as perfect as you can with a pattern, folks. And when you see these, of working with these folks, it really makes you happy to see that people are doing it. I had a really nice conversation real early this morning with a young man that is working really hard towards this level, and he also is working towards pattern recognition. He happens to be a student with somebody else, but he did say he really enjoyed my work, and he liked listening to It Is the Yen. Thank you, Dollar Bill. Folks, this has been another interesting day here in the Pueblo. I didn't have internet connection until 10 minutes ago, believe it or not. All my data is gone and everything, so I don't know what happened, but it was about 8:30 our time, about 40 minutes ago, the internet, everything went out. And of course, that's when the market was breaking. This is the key day, folks. This is the day that we've been waiting for a very long time. If you've been watching what we've been doing here each day on these things, and I want to get this up here right now because this is the one that has been following the model so closely that we got from Peter Eliades, similar to the one that we used for 1987, but this is the one from 1929, and we're 2 days past the full moon. Folks, you'll see that's where we are right now, past the 38 days, that lined up absolutely perfectly at 618, and if this is the case, the market should start to go down and should go down until March the 4th, if that is going to be the scenario. So that's what we're watching here today. Anything can happen, and it usually does. The only thing that would change my mind here would be a move above 4,400 in the S&P, and that's about over 100 handles from where it is right now. So that's what I'm looking at. If you have any questions, it's 877-927-6648. Our guest at the break is going to be none other than Rich Anderson. And boys and girls, if you got any place to store food, get ready to store it, because we could be looking at something next year that will make inflation look like child's play. Take a look at this wheat chart, folks. I posted this yesterday as a trade. I really like this trade, and I really liked it for a minus $250. As you can see, we had a perfect pattern there at the 850 level. And I said, when I sent this out, you got to risk about a nickel, which is 250 points, $250, and we got there. And the reasoning behind it, the trade was perfect as far as setup. It just didn't work. I mean, we have these don't work all the time. But the reason why it didn't work, and I'm going to give you that right now, and Rich will be talking about it, there's some real problems in South America, folks. It's summertime down there, and they're having some real problems. I saw a chart last night, a weather chart from Rich, both on rainfall and also heat all through Argentina, which is a huge producer of soybeans, as is Brazil. And boy, they are really having trouble down there. It's very, very hot and very, very dry. And then as you can see, with the price of soybeans today, we hit $16.70 a bushel. And so all of these things are rocking and rolling to the upside. Slight bit of rain, everything could change. But if this continues, and we got spring planting coming up here pretty soon, and they better plant this thing, fence post to fence post, because if we don't have a good crop this year, there's going to be big problems in the world as far as famine, and we don't want to see that. We haven't had anything like that since the Dust Bowl years of the 30s, and we don't want to see that. That's for absolutely sure. Now, I've also been asked to talk about the chart of Intel that I posted here on the last show that we were on, which was yesterday. You'll notice here that 382 that we had back there in January, that was also an ABCD pattern. Now, the person asked me, why didn't you draw that in? Well, I just see it sometimes, and I forget to draw it in. But it was a beautiful ABCD, low coming in October, high coming in on December the 7th, down into the middle of December, and then up to the 12th of January, and that's when the 382. It actually hit it 2 days in a row, 2 days within 1 week, and that validated that was a very important 382 retracement. So let's remind ourselves, yes, wheat is going nuts, and so is the soybeans. Corn, not so much. Corn has a little bit of trouble up in here, but really not very much. But boy, folks, these grains are getting really interesting as far as breaking out into these levels. I mean, we haven't seen $16 beans since Hector was a pup, and that dog's 12 years old. So this is really exciting what we got going on here. Also in the gold market, we've had some really nice moves in gold, and we're going to have some other ones here. Just 1 second here. I've got to answer something, and then I'll be right back. Just give me a second. Okay. Okay. All right. Thank you very much. All right. Thank you. Okay, now let's move on here to something else here that we need to talk about. I don't think there's going to be questions about what we did with the gold market and with the stock market. I'll post it up again just so you'll be able to see it. This is such a phenomenal relationship that we're seeing here. This is the one we were watching where you had the high in January the 4th. That was the first place to go short, a perfect ABCD pattern, 3 drive to a top. We break down, we come up to the 61% retracement exactly on 3 days. The 2nd of February, the 10th of February, and the 12th of February. And 15 calendar days from there is the 4th of March, in the Ides of March. Oh my gosh, where is Shakespeare when we need him? All right, we'll be right back. 877-927-6648.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks, and I'm pleased to say that we have Jeff on the line that posted that chart of the yen a little earlier. Jeff, are you there?
Yes. Hi, Larry. Thanks for taking the call. Thanks for showing my chart.
Well, you should be very proud of yourself, young man.
3-5 pattern. Oh, I'm sorry. What'd you say?
I said you should be very proud of yourself. That's an absolute classic 1-3-5. What can I help you with?
Oh, sure. Would you be able to take a look at the March YM chart from Friday on a 15-minute time frame?
Yeah, I could probably do that, but I won't be able to post it for anybody because of the way that they do these things. Give me 1 second here.
Oh, that's
you
okay.
want a 15-minute chart?
Right, the YM.
Oh,
March,
I see what you're saying. You want to see if there was a 1-3-5 pattern there today? Is that what you're saying up there at the 33.8? Is that what you were talking about?
Yeah, the 1-3-5 pattern that was there on Friday.
Yes, that's exactly right. That's exactly what it was. It was another 1-3-5 pattern, right on the money.
Right. I had a question actually about that particular pattern. So my understanding is like the time to enter, if you wanted to trade that, would be to go short when the first candle closes after the 5 point. But where that candle closed was actually beyond all my targets. So if that candle closes and it's already beyond all your targets, it continued to go lower, but like, how would you trade that?
No, your risk is too great at that point, Rich, Jeff. So you got to stand aside and you can't do that. You just got to stand aside because it's all related to risk, these patterns. And the best time to do it as soon as you see the candle turn red after that number 5 comes in. But when it's real active, like some of these markets are, like today, you could be looking at a 500-point move in the E-mini Dow Jones, and that's your target. So that's why it's so difficult to pay so much. You got to be really careful. That's the bottom line that I'm trying to mention here.
Exactly. Okay, great. That's what I wanted to know. Thank you so much.
Thank you. Keep those cards and letters coming in, and be safe over there.
Okay, thanks. Have fun in Tucson.
Okay, thank you very much, Jeff. Okay, that was
Bye-bye.
Jeff from Philly, folks, and we'll be right back. We'll bring up another chart that we want to be talking about here. The next one is the XOP. I don't know what XOP is, but this comes from our friend Mike up in Canada, up there in Toronto, and you'll notice here that this has had a beautiful this is the weekly XOP. This is related to energy, I believe. I don't do much in these ETFs, but I know what XOP is. It's an X and an O and a P. So that's a 3-drive pattern on the weekly chart. As you can see, it was just shy of the 61% retracement. Now, what we want to do is, if you're going to be watching these things, you should look at both ends of the spectrum. You should look at the daily and then also look at the weekly. So what we're going to do now is we're going to look at the daily, and you'll be able to see the 3-drive pattern a little more clearly because it's a shorter time frame, and you can see it easily up there when it makes a slightly higher high by just a little bit and then started to roll over, which is, I believe XOP is a energy related. And if that's an energy related, that is not acting very well considering the fact that they're rattling sabers all across the Ukraine. I was in Kiev actually 5 years ago, folks, with Tom Hugard. I've told this story before, but guess what? I'm going to tell it again because I enjoy it. I was there with Tom Hugard for a Forex seminar. We were there Thursday, Friday, Saturday, Sunday, trading and teaching, just Tom and I. We had about 200 people in the room, and it was amazing. Almost all of them spoke English. The thing that I was so shocked about the country is when you come in, you could see these old tanks that were still there from 2014, and also the Europeans have these dark black cigarettes, almost like little cigars, and they smoke. But the most amazing thing, folks, is they don't eat till supper until like 10:30 at night. Work doesn't start for those folks till 9 or 10 o'clock in the morning. So to get adjusted to that was really something. Tom wanted to go to this famous restaurant there in Kiev that has the largest selections of scotch in the world. There must have been 500 bottles of different types of scotches in there. I think he had one sip of one of them, but it was really exciting. We get there at 6:30 to try to get a table. There was nobody there. When we left, there was nobody there. We thought maybe this was really a bad restaurant, but they don't start until 9:30, 10 o'clock. So it was really exciting. Anyway, it's a beautiful country. I really enjoyed it. There was not any danger at all. And I said the highlight of the trip was the people that would come up from listening to TFNN and asking to take my picture. And I tried to tell them, no, I'm not Tommy O'Brien, but they didn't believe me. They thought I was Tom O'Brien, but what are you going to do? Anyway, let's move on here to the next question that Mike had, and that was about UGA, and that's got to be something related to natural gas. And this puppy has been rocking and rolling. This, if you remember, we became very bullish natural gas down there at that 369 level, and now it's way up here, a lot higher. And you can see this large ABCD pattern, the back off, and there was a possible double top in here. But, much of this is emotional, folks, because of the fact that the sabers are rattling over there. And that's where you've got to be really careful because, this thing could really, really get nasty. I don't think that it will because, if you've read anything about Putin, he was a poor boy, grew up in St. Petersburg, and he studied military stuff. He was in the KGB. I think he ran the KGB, and he rattles his swords, but he follows the art of war. If you keep your enemies, your friends close, but keep your enemies closer, and he does that. He's not vindictive, except when someone is trying to take his position or his life, then he'll probably do something. But if he's taking over a country, his history is that he basically makes friends with him. If you You saw what he did with Belarus just about 3 or 4 weeks ago. He met with the president of Belarus on a little thing like a coffee table, not one of these, tables that's 50, 60 feet long where you have to yell and scream at the other person at the end of the room. They were having fun, having a little tea or whatever it was, cappuccino. And when they got up, they hugged and they kissed. And he told him, he said, your soldiers are welcome in Belarus all the time. And Putin said to him, they're here to stay. And he said, wonderful. So that's how you take over a country without any shots being fired. So God willing, hopefully the rest of the world will take all this in stride and not go nuts on this stuff. Let's talk a little bit about the gold market, folks. I want to bring this up here because I think we're at a real critical level here, coming in on gold here today. You'll notice we had this move here. It also had a move all the way down to 1882. That's been the low of this move. We dropped $27, which is normal. The harmonic number is 32, but we didn't get there. So we got down to this, wait a minute, how low? No, 28. Anyway, now we rallied back. We're at the 78% level now at 912. And if we close above 912, then gold could be, getting ready for another rally up above that 1925 level. But it doesn't look like it's breaking out. The open interest is telling us that you be really careful up in here because we're not seeing increases in open interest in these things. We did in gold for the first 3 days of the breakout, but since that time, there's been nothing. I mean, it's just basically got up there and it flat out stopped. Long-term, gold is flat out bullish, folks. I have to admit that. I would love to see, and I hate to use this word hope, but I would hope to see terrible trading work. A move about $50 lower. We'll be right back. 877-927-6648.
Are you having fun trading the markets but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, we're back, folks, and we have Rich Anderson on the line. Rich, how you doing today?
Doing great, Larry. Good morning.
Rich, I was telling the folks today that, boy, if this thing gets any worse than it is in South America, we're going to have some trouble, aren't we, this year?
Yeah. I mean, we're living on the edge. Let me tell you, take Argentina. The government, the USDA, our government, is estimating about 5 to 6 million metric tons higher for their production this year than very smart analysts, that look at the weather are currently doing. The USDA looks at trendline yields, and they are slower to make adjustments, and we just can't afford any slippage. And then, of course, we have the USDA's Ag Outlook forum is tomorrow in Washington, D.C., and tomorrow morning early, the chief economists will release their estimates of what they think will be planted for corn and beans. And, of course, that's often the high for the year because, they're doing it on paper, and then the farmers have to go out and do it in the dirt. It's a little different. There's other problems that occur, too much water or not enough. And so that, they're going to try and dampen that. Not to mention that insurance is based on the average price, closing price in February for corn and beans. And let me tell you, it's even though input costs are up, it's still a guaranteed profit this year. It's a pretty good deal. But to give you an idea, everybody's wondering about Russia. Now, all you have to do is listen to what these guys say, and you know what they're going to do. And when they did Crimea in 2016, they did it right after the Olympics ended. Isn't that interesting? That's what they did this time. Yeah. But this time, he's talking about what Catherine the Great did, collecting back some of the territories that Peter the Great had lost. Looking at his legacy, I mean, this is a very big deal because this isn't just about Ukraine, which, by the way, produced 41.9 million metric tons of corn, and they expect 33.5 million to be exported. And they produced 32.1 million metric tons of wheat, and they export 24 million. So that's a big deal. And right now, I don't want to send my ships into the Black Sea region, not to mention, 75 or 80% of the soybean oil is produced out of that area of the world and goes through the Black Sea. And it's, so freight costs are going to be higher just from insurance alone. So there's a lot of stuff going on. But getting back, it isn't just Russia and Ukraine. All these countries in Africa, their borders were drawn up by somebody. And, if we don't respect borders, then we're going to have this all over the world, not to mention China. It's had their eye on Taiwan forever. Yeah. So this is a very challenging situation. And then you look at the wheat in this country, and you see Kansas. I sent you that one little map this morning. Those red areas, that's where there's not much rain. Kansas, good to excellent, is 26% versus 40 last year at this time. Oklahoma's 9% good to excellent versus 48 last year at this time. Texas is 10% versus 30% last year at this time. So we already have some issues in wheat. By the way, in the 2016 when Russia took over Crimea, wheat and beans went up a buck and corn went up 50 cents.
Yeah.
So
Rich, how about the cost of the fertilizers?
They're a lot tighter right now.
Are the fertilizer costs still going nuts?
Yeah, because they're a function of energy, Larry.
Yeah, I know that.
And frankly, even though they're very high in this country compared to the rest of the world, we're the cheapest.
Wow, that's really something. How about the meats, Rich? How much effect is this going to be? To have higher quality for the other things that we eat. Here I'm a meat eater, so I noticed steaks just this past week in our meat market were up another 30% from what I paid in January, early January, and the guy said, "Hey, look, it doesn't look like it's going to get any lower." So I guess with feed costs going up, it's got to be passed through, doesn't it?
Oh, absolutely, and and then the packers. Now they're making a bunch of money, but they're also their salaries for their employees have gone up.
Yeah,
a lot of it has to do with keeping enough employees there because, of COVID. There's people getting sick. The problem with COVID right now is that on these ships that are transporting a lot of these goods, the seamen are getting sick, and so that's going to affect supply chains even more. Inflation. It won't go away quickly. It will moderate because you'll have a base effect if you'll have relatively higher prices last year and to work off of, and the low prices will be gone. But that'll flip on the earnings side for companies too. There's going to be a base effect there too.
Rich, remember,
by the way, there's a gap I sent you in the monthly chart in the March S&P, and that's what Rick and I are kind of watching that area, and I could give you all kinds of fundamental reasons why that can occur. But
in the S&P, where's that gap at in the S&P? I don't see it. Where is it?
On the monthly charts, on the March, I think it was down there around 39.75, something like that.
39.75. Okay, well, anything's possible in these days. Hey, Rich, do you remember back in the 70s, and when I was at Drexel, I started there in 76, and of course we've been friends since 72. We had inflation then, and I mean, inflation from 1976 through 1980 was a lot more vicious than it is now. You remember the housewives used to complain when ground beef got to $1 a pound, and they decided.
Oh, I know.
Yeah, I mean we're not seeing. This is a different type of environment here. I guess it's related to supply chain stuff. But if these crops keeps getting hammered, this is going to keep going, isn't it, for quite a while?
And part of it has to do with renewable diesel, and that's the greenification thing that's Biden's one of his big platforms, and that's why he tried to shut down the shale drillers, which were the swing production, and that's why our 2 million barrels a day less than we were a couple of years ago before he became president. But if he has his way, and there are plants under construction, we produce approximately 1.5 million or billion gallons of renewable diesel right now. There's plants on the drawing board to make 5 billion gallons by 2025 because all the subsidies that are going to be given out by the California state, the federal government. I mean, but that we would need to just magically create another 10 or 15 million acres of land in the United States to be able to produce. It's not, in the real world, it's not there. You just can't.
Yeah.
You can't wave a wand and get 15 million acres extra.
Hey, listen, thanks for joining us, buddy. We'll have you on again in a few weeks, okay? We really appreciate it, folks.
All righty.
You bet. Be safe, Rich. Rich Anderson, folks, Anderson Capital Management. We'll be right back. 877-927-6648.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, so Mr. Z here in the room at TFNN, the Tiger Den asked me to take a look at the long-term weekly chart of gold. I've got it up here for you right out of the newsletter. You'll notice here that there's a number up there at 1979. As you can see, that 1978-70. And actually, folks, during the holidays when all this stuff was going on, I actually thought we were going to go up there on Sunday night or Monday. We didn't get any higher than 1916 was the high, but I was thinking we could possibly do that because it had broken out above that 1820 level. I feel, we've been short the market, the stock market, we've been heavily short that, and the bonds were really good. But folks, I haven't been long gold since 1855, so I've missed this last $60, and I bang my head on the desk here about 3 times a day saying, how could I miss it? And the reason why is I just not very comfortable buying breakouts. Every time I've done that in the past, I've had my head handed to me. But there should be a great deal of resistance at 1878 if we get there, to 1879. The reason for that is it's going to be a 78% retracement of the high we made back in August of 2020 when we were trading up there at 2080 per ounce. And I believe once we clear 2080 an ounce, we are going $3,500 an ounce and possibly a lot higher. How do I come up with that? All you do is to take your A leg down there at, say, 1,000. You take your B leg up there at roughly 2,100, and your C leg comes down there at 1,700. And you don't have to do the math on that one, folks. That measures at 3,400. So if we clear that, believe me, if Bitcoin can go to 67,000, we can get gold to 3,500 an ounce without any trouble at all. So remember, gold people are different than most people, folks. They got the patience of gold. They buy this stuff and they hold it. Same thing with silver. Ever since this show started here at TFNN way back in 2007, I said everyone should own ounces of silver, these silver rounds. They were selling for $14. Hell, the premium on them, the darn thing's almost $12 now. So you just can't get them. They disappear. Once coin dealers get them, boom, they're gone. So I still recommend coins, because the silver coins, because I think they're going to go to $50. And even if they don't, they're beautiful art objects that you could have and teach your children or grandchildren about the economics of silver and gold and how economics works. Gresham's law: bad money drives out good. So if you got paper money that says we'll pay you back in paper if we got it, that's not as the one that says, in God we trust, we pay in gold. That's what we had up until 1972. And then after that, it's just been paper gold. Paper promises is really what it is. But that number is 1978. We're trading around 1911, 1912 right now. And we could easily get there with any more type of a skirmish. And we could go a lot higher. So my plan is to try to get in the best I can. I tried to buy some the other day at 1880, but we only got down to 1882, and of course we're $30 higher than that right now. So I left that horse in the barn. So we're still looking at the stock market to see what it's going to do, but that's another day of what we're looking at right here. Tomorrow, folks, we are going to have Jeff Hughes of Alpha Insights is our guest. And on Friday, we're going to have J.C. Parrots of All-Star Charts. He's got a nice program for us, so keep tuned for those, because they're very, very fine fellows and do a great job with the technical analysis of the market. So those are the main things that I wanted to go through. There's a couple other charts here that we talked about that are very, very important. And I'll do the other one right here, which is the Treasury notes and Treasury bonds here. I want to get these Treasury bonds, Treasury notes up here first, because that's the one that has made a nice correction here. We're in the midst of a what we call a dead cat bounce in the Treasury notes and Treasury bonds. We got up to 154, I believe, yesterday on that 3-day rally. And then, of course, we started to roll over since that time. So those are just a few of the things that we're paying attention to. But those notes and bonds, folks, are in big trouble, because the Federal Reserve is locked into this because, they're trying to juggle too many balls in the court, and it's going to make them a little bit more difficult, to get through some of this stuff as we go through. So remind ourselves, that's it. We got the bonds went back down to 152 after being 154 just the day before yesterday actually. And so that's it. The most amazing thing that I'm seeing here, folks, of all these markets that are going around, is the lack of volatility that we're seeing in foreign exchange, boy. I mean, it is nothing out there. I mean, there is virtually not much happening in the foreign exchange. The euro's been in a 70, 80 point range now for 3 weeks. All of them, the yen had a little bit of a move, but my goodness, it's just been nothing. Most of the action has been in the metals, the crude oil, of course, and then also in the grains market. Those are the ones that have been rocking and rolling, but nothing. And usually the adage was, follow the money. You want to, see where the action's going. And just to give you an example, let me pull up the Euro chart here, and you'll be able to see what I'm talking about. Let's just get this up here. I'll put the daily up so you can see it. I mean, this just had no action at all. And that, to me, is very, very surprising. Now, the U.S. dollar is going to be tied to these Treasury bonds. And there's absolutely zero chance that those Treasury bonds are going to, be redeemed. They're just not. The only way they can do that is by hyperinflate. So they'll redeem them, of course, but they're going to redeem them with dollars that are 30 or 40% less. So if you buy a bond, just like it was back in the 70s when we had high interest rates of 12, 13% in that Treasury bond, when it came on the board, folks, it was trading at 64. Went from 64 up to 190, and we're trading at 154 right now. 64 was yielding 12%. So not so now. So the only way they can get rid of this stuff is to hyperinflate. How do you hyperinflate? You put money out there, and you got to get the velocity of money up, and the velocity of money is not moving right now, and that's the bad thing to look at it. I don't know what money good means. Good money. You want to know? I don't know. I don't understand the question, Z, about bad money driving out good. That's Gresham's law. That's what got me started in finance, folks, back in Indiana University when they told me that, look, the Treasury certificate said pay to the bearer in demand 1 ounce of gold. And now it says this is a Treasury note. We ain't going to pay you back if we don't have to. So that's what it was, called Gresham's Law. You can look it up, and bad money drives out good. It's always been that way. It's never changed. But, folks, the one thing that's the most important, that when we were here, and we've been talking on this show for a long time, when they started to feed us stuff about negative interest rates, boy, oh boy, to me that had to be something that, I don't know who thought that up, but boy, they did a great job of selling it, I'll tell you. But even a 3-year-old would realize that that's not a good thing. You give person money and you pay them for taking care of your money, and they're going to give less of it back to you than you gave them. Put it in a mattress. 877-927-6648.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Are you looking for a secured investment which pays you on a monthly basis? The Tiger First Mortgage Program may be the program for you. The best rate on a 5-year CD in the country right now, according to Bankrate.com, is paying 1% per year or $1,000 per $100,000 invested. The Tiger First Mortgage Program pays 7% per year, paid monthly, on secured, high-value, buildable properties in St. Petersburg, Florida. The investment is for 4 years, paying 7% per year or $7,000 per $100,000 invested. Your investment is secured by high-value real estate in St. Petersburg, Florida. Your investment can be anywhere from $100,000 to $500,000. Do you want to make $1,000 per year on $100,000 invested or $7,000 per year on a secured Tiger First mortgage? The Tiger First Mortgage Program may be just the program for you. The Tiger First Mortgage Program pays 7% per year, paid monthly. For more information, you can call 877-518-9190. That's 877-518-9190.
Okay, we're back, folks, and I've been informed by YouTube that I have been banned forever for talking about Mr. Putin. They think I'm a Russian agent. And if you believe that, boys and girls, I still have 2 shares of the Brooklyn Bridge that I've been able to sell for many years. Anyway, I'm not a factor in that. I'm just telling you, I watch military people to see how they're trained and what they look at. And, of course, their main book is The Art of War by Sun Tzu. And I think it's it's a great piece to read just about strategies. And one of my favorite quotes in there that Shane always talks about, and that is never let your enemy know that they've made a mistake. It's something like that. I'm not paraphrasing it the right way. Anyway, that's what we're watching. The key figure today to watch, folks, is watch the Dow Jones. If we can close above 33,700, this whole sequence of what we're looking at may not happen. But if we close anywhere below 33,400, that would be very, very bearish, and we could be looking at 29,000 in the Dow by the 4th of March. Or even sooner, possibly. But anyway, that is the factor that we're watching for. And I'll put it up here one more time because those of you that want to make a copy of it should, because we've been talking about it for a very long time. And March 4th is 55 calendar days from the high, which is roughly little more than 2 months from the high that we made back on January 4th, going out to March 4th. As you can see, that's how that works out. So those are the things that we're looking at today. Remember, Jeff Hughes will be our guest tomorrow of Alpha Insights. On Thursday, we're going to have, tomorrow is Thursday, we'll have Jeff Hughes. And on Friday, we have J.C. Parrots. And with any type of luck at all, we're going to have Joe DiNapoli on next week. I've been trying to get him on, but, he's very, very busy. I guess he's counting his money all the time, but we're going to have Joe on next week for sure. Folks, try to help your neighbors out there. The COVID's starting to end up, but there's still a lot of people that need help. Live every day in an attitude of gratitude, and may God bless. See you tomorrow, folks.